heavily invest in that company though, is that they just seem to be so far ahead in the automobile space, and I don't know how they find a way to do all these cool new projects, but they're just good at what they do. And the other automobile manufacturers cannot keep up with Tesla because they don't have the technology. They can't make the same car with the same profit margin. So Elon Musk right now has a massive lead on all the other companies out there, but is that lead going to sustain itself? Nobody knows. I mean, it's easy to believe that one day, GM and Ford and Mercedes and all these other great companies are going to catch up, but they haven't caught up yet, and they're nowhere close. So maybe Tesla's something decent to have in the portfolio. Now, I believe that as the market rises, everything's going to rise. Tesla's on the forefront also of an important industry called artificial intelligence. AI is huge right now. We're in the middle of what some perceive to be an AI bubble. But do I believe that Tesla is a great investment? I wouldn't bank everything on Tesla though. I met a young guy who was I was so proud of him. He was like 33 years old, and I had my mask on. This was during the mask days, and so he didn't know who I was, and I didn't know if he knew who I was. I don't ask people that. And we were talking, and he was just talking about he bought this $2 million condo or something, and he was like 34 years old. And I was really intrigued by this black man that had all this money, and I was really happy for him. And the way he bought all this stuff was he said that he had 99% of his portfolio in Tesla stock. And I was like, I don't know if that's a good way to go, you know. And then eventually we talked for 30 minutes, and I took my mask off, and I said, yeah, I have a YouTube channel. And he was like, you're Dr. Boyce. You're Dr. Boyce. And I was like, yeah, I am. I think I am. And so anyway, but what I did tell him is I said, you know, I don't know if I would put all my money into Tesla like that, because if something goes bad, you're in trouble. At the very least, though, let's say that he just loved Tesla that much, which again, I do not recommend this at all. This is not something I would ever do, put all that money into one company. But if I did, I would make sure you protect that downside, protect from that downside. Make sure that, if you've had this big rise, why not take a little bit of that money and fortify the portfolio. Put some stop loss orders in, to stop the loss, or maybe buy some puts or something so that if the stock price drops, you'll have something to balance against that. And so, but I think he's still doing okay. I mean, I don't know. Right now, the strategy seems to be working. What's the name of the conference for Black doctorates? It's the Black Doctoral Network, and the Black Doctoral Network, they're hosting their conference inside the same building that we're hosting the All Black National Convention. So I'm super excited about that because this is going to be historic, in my opinion, because this is the first time, to my knowledge, that you've had this many highly educated and highly intelligent Black people together solving problems specifically for Black people without any with independent funding, without corporate sponsorship or the government paying for this. So this isn't paid for by the Democrat or Republican Party. It's not paid by Walmart and Coca-Cola and all that. This is something that where we raise the money, and that's important because money is power, and money shapes what you can and cannot say. There are conferences I've gone to where there were just things you weren't allowed to talk about because the sponsors would get offended. And so we did this. And so we're super excited. And the convention is going to be October 20th in Atlanta at the Marriott Marquis. You can go to allblacknationalconvention.com if you'd like to take a look at the roster and the lineup. We have a lot of great people there. We've had billionaires there. And last year, the CEO of the Air Jordan brand was there, Larry Miller. And we have a lot of great people there. But we're not really big on, necessarily just like rappers or celebrities and stuff. That's not our thing. Although we do sometimes have rappers there, but they have to sort of make sense. Like they have to meet the standard. If they don't meet the standard, we're not going to bring you in just because you have a record deal. I want to know what you're doing that's actually beneficial. All right, so anyway, let's keep going. Losire says, good evening. I'm just learning and fairly new to this. I have a settlement and I would like to invest some of it so that I can help secure my future along with my family. I need help and direction, please. Okay. All right, so we will help you. We will do everything we can to help you. Also, Chanel is in the chat. If any of you have ever wanted to book a private consultation and talk directly, I talked to a student today. I do about maybe 3 or 4 of those a month. I can't really do too many, and it's not free. But so if you have something substantial happening, and you want me to, guide you in making some major decision, feel free to look into that. And Chanel's right there in the chat; she can help you with that. Also, I would say whatever you do, do it carefully. That's it. That's the biggest thing I would say. If you have a bunch of money in your pocket, don't jump into something massive. There's a young lady I mentor that suddenly came into a couple $100,000, and she came from a family that doesn't have that much money. They've never seen even 10% of that. Even 20,000 is a ton of money for this family. She had $200,000, and you would not believe how much pressure there was on her to first of all pay everybody's bills. right? Because you got all these friends or relatives that you've been close to your whole life, and they're making you feel guilty, guilt tripping you. I have an emergency, I'm about to get evicted, or I need help with my car, whatever. But then also there were a lot of people that brought business deals to her, and the role was already picked for her. Like the role was, I've got the idea. You're going to be the financial benefactor. You're going to be the sponsor because you've got all the money. And these would be investment deals where she'd have to put up $25,000 or $30,000. And I said, I don't know if I would put up $30,000 into a business where you're not really sure if that business is even going to make money. Because if it doesn't work, they're not losing anything. You're going to lose $30,000, $40,000. You can run through that money really fast. So I was really proud of her because she really locked down that money. She would not have conversations about it. A bunch of her family members are mad at her, but she said, "I'm not going to destroy the financial security of me and my kids because you brought some harebrained scheme to my doorstep." So what she did was I helped her come up with a plan where she could still help out a little bit. Like somebody comes along, they want to borrow $3,000. Maybe you loan them $400 and you say, "Don't ask me for money. Agree with me right now that you're not going to ask me for any more money for another 2 years," or something like that, right? And the thing is, I told her, I said, when people want to borrow money from you, they're very desperate, so they'll promise you anything as long as they can get the money out of your hands. So use that power to your advantage while you have it, and then that way, when they come back later and they say, "Hey, can I borrow another $300?" You say, "No, you told me, you agreed. You wrote this down that you weren't going to ask me for money for 2 years, so don't ask me for anything for 2 more years," right? So anyway, little things like that. So be really careful. I recommend looking at things like mutual funds. We have things in the Black Business School. We have the $5 a day investing plan, which I assume a lot of you know about, and I designed that to be as simple as possible, but as effective as possible. Any family who does that plan very basically, a 4-year-old could do it. That family will go from poverty to wealth in one generation. They literally, or from wealth to wealthier, from middle class to upper class, because it's designed in a certain way. All you have to do is buy into these mutual funds that I pick for you. One is Victor Oscar Oscar VOO Vanguard, or SPY. We also talked about another one that was AIQ. I think that's the ticker symbol, AIQ. And if you invest in those companies consistently and set it on auto deposit, so you're not even thinking about it, and just look away, don't sell anything, and wait at least 10-15 years, and you're going to start seeing that you have a lot more liquid wealth than other people do. Just don't fall for the temptation to sell and get out early, because then you're going to miss out. All right, let's see, what do you think about Waymore? Ricky, I'm going to look at Waymore in a minute. Bring it back up in a little bit later. Michael, do the puts go away when your stock is called? No, they don't. Remember, the put options are a separate contract. When you buy or sell puts, that is a separate investment that's separate from your calls, is separate from your stock. It's like sort of three different things, right? So it's like if I make a meal and I have carrots and steak and chicken, those are all three different things. Repeat the investments. One is VOO. Somebody type that in the chat so everybody sees it. The VOO, Victor Oscar Oscar. That's a Vanguard fund. SPY. That's I'm trying to practice the phonetic alphabet because that's what I have to do for pilot training. That's Sierra Papa Yankee. See, I did that. Look at that. Look at me. All right, Sierra Papa Yankee, SPY, and then another one was AIQ. That is Alpha India Quebec. I'm getting it, y'all. I'm gonna be flying airplanes soon. I flew yesterday. I flew to from Joliet to Valparaiso. So it was a 60-mile trip, and it took like 25 minutes. It was the greatest, very powerful. I love the idea of getting in an airplane, just taking off, and just flying over the traffic. It's awesome. All right. Anyway, let me be quiet now. All right. So okay. So Sean says, for tax purposes, if I just sell the covered calls for a living, what occupation title should I list? I would say for tax questions, I would defer that to your tax specialist. But I would say it sounds to me like maybe you're an investor, trader, or something like that. But that may not be on the list. So you could be an entrepreneur, business person, that kind of thing. Talk to your tax professional too about the tax implications if you're concerned about that, because you will pay taxes anytime you realize a gain. Anytime you make money and you sell that asset and you get cash, there's a verifiable transaction that the IRS will tax, right? So a lot of times when we talk about roll-ups and roll-downs, which is in your curriculum, if you log in, there are examples on how to do a roll-up, how to do a roll-down. That is going to impact your tax situation. So a lot of people will do roll-ups and roll-downs to avoid selling, right? Because when you sell, you're kind of coming outside, so to speak, financially, and that's when the IRS takes notice of you, okay? All right, let's see. Keith and Tonia says, we're so proud of you, Dr. Boyce, safe line. Well, thank you. Well, I'm very proud of of Keith and Tonia's family, they're doing exactly what we talk about here. You know, I'm telling you, if you build wealth together as a family and do things like that as a family, and kind of just let go of kind of depending on these systems to do things for you, you get so much freedom and flexibility that allows you to just create exactly what you want. But it requires a little bit of training, right? It requires training. Like it's like if I decide, let's say I don't want to keep going to McDonald's and Burger King and eating like Happy Meals or value meals, and I say, you know, I think I want to make my own meal, right? Well, maybe that means if I'm in my house and I grow, let's say I even grow my own food, I got to learn how to grow food. I got to learn how to cook it, right? But once I learn how to grow it and learn how to cook it, and I can even spread the task. Like I could say, like my wife, for example, she knows how to grow food. Well, she also cooks the food, so that's a bad example. But let's say that she grew the food and I cook the food. Well, then together we can have healthy meals, right? And so to get a healthy financial meal, I would encourage you to really think as a family, like what is it that we actually need? What do you really need to be a free, fully functioning adult in this or a family in this society? Well, you need food to eat. You need a place to live. You need the ability to pay your bills, maybe some money to pay, you know, electricity and water and internet. Maybe you need some transportation. I guess that's it, right? Like if you have a place to live and food to eat and your bills are paid and you have transportation, what else do you need? You don't need anything else. Right? So there are people that live like that where they just say, let's all together, let's get some land, get a medicine, there we go. If you get sick, you need medicine. But you can get that, right? You know, I mean, it's hard to grow your own medicine, but you get the point, right? But you can, you know, there are entire YouTube channels about holistic health and stuff like that, where you can get away from big pharma and all the pills they want to shove down your throat, right? So ultimately, my point is to say that when you think about it that way, it's kind of exciting what you can actually create for yourself, right? So I would say start with the wealth piece, right? This whole idea of getting up and going to work for somebody every day to pay your bills, that's contrived. That was created. That was designed because they needed people that are going to do the work necessary to run a capitalist society. That's going to be you, the worker. I don't think any of that's necessary. I think you should raise your kids outside of that system. We don't raise. I don't. You know, my wife and I remember I'm the bonus dad. So they have another dad who's a great guy. They kind of have done the whole work for other people thing. I've never done that. So when I talk to them, I don't even talk about careers and jobs and all that. I talk about like money and wealth. Like here's how you get enough money to pay your bills so you can really live the life that you actually want to live, and it's not distracted by some meaningless task you have to do in order to get just enough money to survive. Like so be creative about those conversations. So anyway, let me keep going. All right. So Natasha, do you buy your puts as soon as you buy the call? How do you know if you should buy a put? I buy puts to protect as many shares as possible. I don't always protect all my shares, but I like to have some puts there just to protect. And what I'll do is when I show you an example of actually today on this video, I'm gonna show you how to sell a call, and then we do. I made a short video on how to sell a put. And the reason I want to show you how to sell a put today is because you might sell a put when the market's going up, up, up. Because let's say, for example, that you have a stock, and so here's what's happening, right? You sell the call, the stock price is here, your strike price is here. So you made some money because you sold that call. So you got cash in your bank account. That's your money. You get to keep that forever. The price goes up and it shoots past the strike. And you're like, oh, man, you got FOMO, right? Well, FOMO is it occurs because now they're going to come buy your stock at the agreed upon price. They took a risk and they deserve compensation for that. But you made money. Don't forget, you made money. You made the gap between the stock price and the strike price, right? So if the stock was trading at 70 and the strike of 72, you still made $2 a share plus your premium. So you made money. This is why I say I don't think greed is a good emotion to have, because just because you could have made $5 a share doesn't mean you can't be happy that you made 2.5. At least you didn't lose money, right? But now the stock has priced itself like beyond the strike price. So you have some options, right? You do roll ups and roll downs and things like that if you want to. But let's say you just let the stock go. You let them buy your stock at 72 per share, and now the price is 73, 74, 75. Well, let's say that you don't want to buy it at 75. You say, I don't want to buy the stock at 75. Well, what you can do actually is you can sell a put, right? You can sell a put, and you can say, in exchange for receiving money, I'm gonna put some cash to the side. You have to secure your put though. You have to have money put into into your account to secure the put, to make sure you can follow through with the deal. You could sell the put and say, I guarantee that if this stock price drops below 73, I will buy it at 73. Do you understand what I'm saying? Like, right? Like I'm going to sell this. I'm going to I'm receiving income, right? So you can still make income from the money that's in your portfolio, right? This is the goal of when we talk about in prime is acquiring an asset that allows you to generate consistent income that lets you make money without working, right? This is what I do. This is how I make my money. I work, but it's because it's like talking and stuff. It's not actually me having to get up and go to a job. Okay, so effectively, you sell that put. Now what's happened is you kind of become like the insurance company. You're receiving a premium in exchange for a guarantee. You're guaranteeing, look, if this stock drops below 73, I'll buy it for 73. Well, why would you do that? Well, maybe you do it because you want that stock. You want to get it, but you don't want to buy it at 75. But you buy it at 73. And on top of that, you can get paid to just stand there and to just say, hey, I'll buy it at 73. And if it doesn't drop to 73, guess what you can do next week? You can say, oh, I'll still buy it at 73, and you can sell another put. Now, you have to adjust based on what the stock price has done. Stock prices don't sit still. They move around like crazy. It's the weirdest thing in the world. The stock market is such a fascinating animal because think about this. If I look at companies like, let me share my screen here. Let me show you. If I look at a company like, let's pick a different company so we can have some fun. Let's say we're looking at Microsoft, right? Microsoft stock. Okay. So can y'all see Microsoft on the screen? Like, give me a yes if you see Microsoft on the screen. I want to make sure it's coming through. Okay, let me check the chat. Can y'all see Microsoft up there? You see it? Okay, thank you, Levon and Kevin and Cynthia and Abel and Danielle. All right, so look at this. How crazy is this? All right, so so if I look at Microsoft at 9:30 a.m., Microsoft was worth $345.95 per share. By 9:55 a.m., it's worth 342. By 10:25, it's worth 346. By nighttime, by 5:30, it's worth 349. If I go back and look at it year to date, again, Microsoft is another one that's just made a killing. They're right on the forefront of the AI boom. That company's gonna make a ton of money because of AI. Look at this. This is and what's fascinating to me about this. This is almost like a philosophical kind of thing. I'm not gonna get too deep with this, but it fascinates me how you can have the same company that's kind of making the same money, same people, same projects, same everything, and their price can change that much in a short period of time. Like, do you really believe Microsoft was a different company when the price was here than it was when the price was here, when it was at 349? Do you think that something changed significantly? Did Microsoft suddenly change their value proposition, their strategy? Or when it was 364 earlier this week, and now it's at 344. I mean, how much do you really think changed about the company? No, nothing's changed. But it's like a boat. If you're in a boat, the boat is the same boat, but as the water moves, the boat kind of rocks and shakes. 1 minute you're over here, 1 minute you're over there, and just or big waves will come in and it'll rock the boat. But for the most part, the boat has not changed. So effectively, this is one of the more interesting things about the stock market that provides tremendous opportunity, where you can simply make moves at times that are most convenient and most effective, as opposed to feeling pre-committed to any specific move. All right, so let me look at more of your questions. If your stock is called, do you lose your put? No, you do not, Jetro. You do not lose the put. The put's a separate transaction. Ken, hello, Dr. Boyce. If margin money is taken out on Robinhood, what terms does Robinhood make you do to repay the margin loan that you took? Okay, so they have an interest rate. I don't know what the rate is right now. It's probably higher than it was before because interest rates have gone up. Hey, Ivy, I see you got to go. All right, have a good day. Thanks for coming to class. Good to see you. And this recording, by the way, if you log in, if you want to see everything that's in the Prime program, just go to drboyceprime.com. That'll give you kind of an overview, drboyceprime.com. Or you can also log in at theblackbusinessschool.com. And if you log in at theblackbusinessschool.com, there's a section called Prime Plus Lectures. That's where all the recordings are placed. And Chanel can give you the link to that. And Chanel, I know she will download it and get it up there in the next 48 hours. So if you have to leave class, don't feel bad. It won't hurt my feelings. But everything's there. Everything that we do in this class is recorded. So I want to let everybody that's new make sure you know that. All right, so let's see here. I searched online and I can't find the ins and outs of how margin is repaid. Just that it is not recommended to do because you could lose all your money and then some. I don't agree with that assessment that margin is not recommended. All margin really is debt. That's it. All it is debt. And let me see if I can show you. It'd be better to show you than to just explain. Let me see here. Give me 1 second here. Let's look at Disney. All right. Let's look at now. Remember, let's start with the premise that debt is bad. Okay, that margin and debt are just terrible things. Let's look at Disney. Y'all think Disney's a pretty good company? Has Disney been pretty good at making money in the last 50, 60 years? All right. So let's look this up. Let's look. Long-term debt can be defined as the sum of all long-term debt fields. Disney's long-term debt for the quarter ending March 31st, 2023 was $45 billion, which is a 3.3% decline year over year. Disney's long-term debt for 2022 was $45 billion. For 2021 was $48 billion. So Disney, a company that knows how to make tons of money, a company that makes enough cash flow where it could probably fund itself for the most part. Not everything, but they could fund a lot of what they do with the money that they make from theme parks and TV deals and everything else and movies and all that. They put out at least 2 or 3 movies a year that gross over $1 billion. That Little Mermaid movie, I'm sure that made well over $1 billion. Moana, all these other movies that your kids watch. So if Disney's making this much money, and these are smart people that run a strong business, why in the world would they take on $45 billion in debt? Well, the reason that they take on this debt, and they're glad to have some of it, they're cutting it down. Too much debt is a bad thing. It's because debt is a critical fuel for any business that wants to supercharge itself. Debt is something that is extremely powerful. If I'll give you an example. Elon Musk is one of the richest men on the planet, and Elon once said that the reason he signed a document admitting guilt to the SEC was because the SEC pointed out a clause in his debt covenant that said if he's ever under investigation, they can recall all of his debt immediately, meaning make it immediately due. And he said then Tesla would have to declare bankruptcy immediately. They would have to declare bankruptcy immediately, right? And the thing is, that the bankruptcy, is not a reflection of them not running a good business. Tesla's a great business. Elon Musk is a good businessman. But without his access to capital and debt, he wouldn't be able to do what he does. So I would encourage you not so much to have a strict opinion about debt. You're going to see people like Dave Ramsey or something who will say pretty much that debt is always bad. And I don't have a big problem with everything Dave is saying, because Dave is really basically kind of saying for a lot of people, debt is a bad thing. Credit card debt, debt, student loan debt, all these other debts are not beneficial because these debts don't help you make money. Disney's debt is a capital asset. Disney will go borrow $10 billion so they can build, a string of hotels, right? Disney will borrow $1 billion to go make a movie that's going to make, $2.5 billion, right? So for Disney, their debt is an asset that generates additional income, which springboards their earnings for their investors. For most consumers, their debt does nothing for them except cause them financial stress. Okay, so I would not ever have a firm opinion about debt. The answer when it comes to debt is it good or bad? Well, it depends. What are you trying to do with this debt? What is this thing helping you do? So, for example, when I sell my calls and I make my money, I use Robinhood Gold a lot. I use their debt or their margin a lot, because what it does is it allows me to take this much money and I can buy this much stock. So I can leverage my situation. Now, what you have to do then, though, is that when you're making those sorts of investments, you have to be sure to protect yourself from anything that can go wrong. So if you borrow a bunch of debt and you don't sort of prepare for the possibility that your stock price could go down, then you're taking a little bit too much risk. So this is why in your portfolio, when you're trading your covered call,